May profits be upon you. We're going to take a look at Aussie Swiss, the Aussie dollar against the Swiss franc. Let's take a look at the RT money meter. And what do we have? The Swiss ranked number 2 last week at minus 148. The rate of change is showing that it's going down. Minus 354 this week. Minus 354. It is getting a little weaker. However, it is ranked number 2. It is one of the strongest of all of the currencies. And you can see Aussie dollars down there at bottom, the bottom half. Last week it was at minus 751. This week is at minus 814. It is trending down, getting weaker, just like its cousin, New Zealand dollar. Trending down. Okay. So I'm going to have similar I have a similar forecast for Aussie Swiss. I'm going to put these two together because the Swiss outperforms the Aussie dollar. And you can see that in the weekly. Look at the weekly time frame. I want you to look at these candles. Each one is a week. 1, 2, 3, 4. 4 straight, very bearish candles, very full-bodied candles. All right, they're just full-bodied and a lot of momentum to the downside, and we break structure to the downside. And that means we are really bearish, okay? And you can see there's a flip zone here, right? Where price reacted, leveled off, and then fell, and it created a supply zone that if price does make it back up there, whenever it does make it back up there, all right, and that's a ways off, I will be happy to take a short from there. Very happy. That's the way flips work. But that's not the point here. The point is, look at the new candle. This candle is barely a week old, right? And it opened very bullishly, and now you see the sellers come back in and it's pushing down, and we have a lot of time on this. We have a lot of time left in the month for this candle to have some follow through behind it with the next candles coming. We're going to see some bearish price action. That I can assure you. So on the daily, what I wanted to also point out was this is the COVID low, right? March 2020. That's when things were horrible. All right, things were just horrible for everybody around the globe, and we did rebound. Nice V-shaped recovery here. You can see that, right? Nice rebound, but we didn't break swing structure to the upside. It was a short-lived rebounding, and prices found its way back down. Let's go down to the 4-hour. All right, you see this demand zone I got here? That's a daily demand zone, and it's built off of here. All right, I don't particularly think there's long-lasting possibilities for this one. All right, because there is relative equal lows below it, and it seems prices got a lot of bearish momentum. All right, we're getting ready to come in touch with this zone shortly. All right, we're in a demand zone right now. All right, this is a 4-hour demand zone, and you can see how price responded. Right, price took a big bounce, broke structure to the upside, so we should be bullish, right? As soon as it breaks that high, all right, we had a change of character here, break of structure here, internal break of structure to the upside. As soon as that happens, I'm down here looking down at this demand zone to see if it holds. Well, price did come back down here. Boom. All right. Had a reaction. Boom, boom, boom. These, because we are failing to make a new high, it lets me think that this is a weak, that this is a vulnerable low, and it won't hold. This demand zone will not hold. And just looking at the rankings of the on the RT money meter will have me expecting price to continue down and take out this low, and we'll see what it does when it gets to this demand zone. Okay, so we have the what do you call the FOMC on Wednesday, and we have the CPI data coming out on Thursday. All right, I expect to see some reverberations, if you will, in the Aussie-Swiss pairing. All right, and we may see some drifting because we have a U.S. holiday on Monday, and then 2 days before the FOMC, and then CPI the day after that. So we may see some floating here, a week move up, but any move up I'll only be looking for a better price for my short, period. If it makes it up here, I'll be happy, so happy to take a short from up here. No doubt about that. I would love to take a short from up there. All right. But price is heavy. All right. And we may just see price take out this demand zone upon the open. And if in that case, wait for price to pull back to the demand that's left behind here and take that into this zone. Okay. If price takes this out, let it mitigate the zone, let it come back up, and take that return and short that. This area looks like a good area to look for a short. Should supply form here. All right, but I'm not going to project that just yet. So just look for, that's the bearish scenario. Okay, if price breaks this, mitigates this zone, then take the pullback and be happy to take that short from there. Okay, and if price starts to drift up a little bit, let's see if we can make it up. This looks like inducement for this mitigation. I would love to take that trade from here for sure. So we got two scenarios, right? Boom. Whoa. Boom. Okay. I hope you enjoyed this video. Make sure you smash the like button if you want to support what I'm doing here. All right. If you want to support what I'm doing here, if you're picking up what I'm putting down, make sure you smash the like button and leave a comment. Let me know what you might want analyzed, or that you agree with my setup or you disagree. It doesn't matter. I would love to see you get your feedback, and make sure you subscribe and let people know. Let your friends know that, hey, this is a good channel. You can find some benefit from it. All right. There's a guy named RT Money who cares about you. All right. I will see you in the next video. Thank you for watching.